Good morning, everybody. Let's have a think about the overall strategy. Now that we're pulling back on Bitcoin and stocks, and we're seeing what I expected to see yesterday. So yesterday morning I made the video saying, I'm surprised to see that stocks are basically a little up in the pre-market. Dixie's down. Oil is effectively unchanged, as is gold. Very surprising to see that. Might have to reassess my overall strategy. Later on that day, things started to become a bit more as I expected. And finally, we closed with a nice big red candle on stocks. So Nasdaq, S&P, Dow Jones, blah, blah, blah. Dixie up, blah, blah, blah. Oil up, blah, blah, blah. Gold up, blah, blah, blah. So yeah, it ended up doing exactly as expected. And obviously, Bitcoin and altcoins still looking pretty nasty. So the overall strategy for me has been, since December, try to limit positions. Buy the dip, sell the rip is okay, but try to gain as much cash as possible for a larger consolidation, which is going to take place at some point this year. I sort of estimated that the next major buy zone for big long-term positions are going to be towards the end of this summer, maybe towards Q4. Again, an educated guess. But we're gonna, the reason I throw these times out there isn't because I'm predicting, yes, you must buy at the end of summer. It's October. No, that's not what I'm talking about. What I'm talking about is we're thinking about time. All right, time is key for lots of reasons. Whether you're buying and holding requires time, or if you've sold and you're waiting for allocation, which requires time. So trading, a lot of it, time has to be applied to it. And you can never really measure it out perfectly, but so I was trying to put it out there that a consolidation is going to happen. We've rallied so much now on S&P and Nasdaq and obviously Bitcoin. Altcoins, some of them, some of our ones done a 10x and then they sort of fizzled out. So we're waiting now for a consolidation to, first of all, pick up pace over a period of time and then find some levels which are more appropriate to buy for a longer term hold positions, right? And again, buying from a lower area normally would mean that you're likely to receive more back. Never getting used to high prices, which has been one of my probably most annoying catchphrases that I've been using on the Patreon for probably at least a month or so now. Probably more than that. So the strategy is that. And so now we're seeing the consolidations. Let's think about the areas where we can think about buying from. Also, we've got the Bitcoin halving, literally a few days away. It's going to happen this week. The normal expectation of that is that we're going to continue to sell off. And then later on this year, the economic reality of that halving is going to kick in, and we're going to see the fruits of the halving, which is basically a more expensive Bitcoin. So first of all, starting with stocks, what we're looking for is a move probably down into this 20 weekly moving average, the 21 exponential also on the weekly. Whether that happens this week or next week or whenever, we're kind of looking for a move down to that. Then we'll probably see what I will call an everything bounce part one. Maybe we'll move up to around about here again until we start to see the price action. It's going to be difficult to interpret the exact price. But I would imagine something like this to a lower high. Then we will continue down to where I think is probably an educated guess as to where a bottom could be. Now, it could get a hell of a lot worse than this, trust me, but we'll start with this. And this is the previous all-time high around here. So with that would be downside, upside, and then further downside. So if we think about what that means for something like Bitcoin, it's basically the same thing. The markets are very much tied together. Again, here we are on the daily. We can see a rejection on the 10 exponential, again on the 10 exponential over here. So you can assume that a 10 exponential might get a rejection. If not, we'll see a rejection around the 68,000, which is the Bollinger Band center. Standard sort of moving average price action, really. If it's really bad, we can get rejected around 65,000 as well. Or even the 50 exponential, which has now got a down slope on it, which is 64,700. Either way, a lower high will emerge on Bitcoin, and then lower lows will form shortly after that. First lower low would be this wick low over here, around 58 to closer to 59,000, which is also right below the 10 exponential. So if you start to see this get hit, I would imagine a nice everything bounce from here. It's a bit of an intermediate zone. You might see a rejection from it, and then the 20 moving average and the 21 exponential moving average will likely catch us again. If we break down below there, it does get particularly nasty. There is a horizontal area of significance around 50,000, which could get hit. And if, at this point we are talking weeklies. We're talking between now and the end of summer, a consolidation take us down to these levels. So if we think about that, if we measure what these sort of moves are going to be like, down to the horizontals a further 7.5, down to the 20 moving average is 15.5, and then down to 50,000 is 20%. Right, so we think about what that means, that 20% means. Altcoins, you would imagine, would accentuate that by at least, let's just say by at least another 50%, as in a 50% more than that. So we'll be talking at least 30% retrace on most altcoins. Probably some of them will see 40, 50, maybe even 60%. We were looking at a lot of altcoins yesterday, and they are already quite wrecked, but trust me, they can get much more wrecked if they need to. And we don't know what the overall environment, I mean the global situation, we don't really know how that's going to unfold. There's a huge element of doubt in how we can treat charts appropriately, because if we go back in time, we see the last sort of black swan that we that took place. We had a consolidation. We had broken out of a consolidation. We were looking quite good for Bitcoin. We would have likely have gone on to 12 and maybe even considered, started to trade up further and further and further, but we didn't. Black swan emerged, and we dumped pretty hard and pretty fast. We came down to a 20 moving average, and then we basically smashed right through. That smashing through took us down to areas on the chart which hadn't been seen since the accumulation after the lows, right? So what I'm saying is, a black swan can take us down further than you expect. Moving averages become not irrelevant, but they don't hold up as much as you'd like to see if it was a naturally forming consolidation. And with that, we should never be completely surprised at how low a price can go. But to assume and expect a black swan is also pretty naive as well. So you've got to take it level by level, bit by bit. Long story short, the overall trading strategy is one of a protective, guarded stance for me, and waiting for lower prices to emerge. And if they don't emerge and we keep going up, I will still buy the dip, sell the rip, but I will not be allocating for long-term large positions from these higher prices. Not generally. I will be looking to just trade this market. I have a lot of hodl. Don't get me wrong. I have been hodling some coins for several years since the lows. I've still got a handful of Matic, for instance, that I bought at 1.2 cents. I've got loads of XRP that I've accumulated through derivative trading. I've got all the Ethereum that I bought at $160. I've still got Bitcoins that I bought back down at $4,000. I've got loads of hodls. That's different. That's a completely different strategy. You buy them, you hold them, and where possible, you stake them. And you just allow for them to reach higher levels over a prolonged period of time. You're not in any massive rush to sell them. You're looking to perhaps maybe try and time a cycle, or you're just using them as a store of value, which they are. I know people like to disagree with that concept, but if I bought Bitcoin at $4,000 and bought Ethereum at $160, and they are worth a lot more than that today, I would consider that a store of value. It's better than your bank account, isn't it? There's no stocks and shares ISA that you could deposit that amount of money in and have those sort of returns. Just ride the wave with volatility. That's fine. Hodls are fine from appropriate areas on the chart. I'm talking about trading as well at this point and applying long-term positions to the charts. And at the moment, I still don't feel comfortable doing it because it looks like a consolidation has started and we're in the midst of creating a higher low and then a lower low. And then that lower low might go to make another lower low. And again, we've just got to take it one step at a time, bit by bit. We don't want to get complacent. We don't want to overexpose ourselves, especially so early on in the markets. Now, this isn't a bear market, by the way. This is a consolidation, the one that we've been talking about for a long time. So let's have a look at the total 2. And this is a pretty interesting chart, I have to say, and one that we could try to think about altcoin allocations from. So we've already seen the move up that took us beyond the major resistance. We're starting to see the move down now. That's going to take us down to the next resistance, which has already been hit here, by the way. We've already had this one hit. I think it's likely that we come down further than this. Based on the weekly, if I can just reset this chart, I want to see my actual moving averages. If we can actually see the wick on the total 2, it was the weekly 20 moving average, so the center of a Bollinger Band with a nice bounce on that. we're getting continuation of the downside now, so it does seem quite likely that we hit 920 billion again. And if we lose that area, we do come down further, and that'll be a 50 exponential down here, and maybe even the 200 exponential down here. We don't know how deep it's going to go. This is why we apply time to this chart, because we'll likely see an everything bounce with S&P, Bitcoin, stocks, the lot. But will it find a low? I don't see any reason to assume that that's going to be the low. But if it becomes the low, then great. We can assess the situation when it happens. Again, the overall trading environment does require, unfortunately, the words of global leaders right now, which does mean that these charts, they're not irrelevant, but they have less relevance than they did perhaps maybe a month ago. A month ago it was a bit more of it wasn't a sane world, but it wasn't quite as insane as it is today. And so the insanity has to be applied to these charts, which does render a good deal of it untrustworthy. So we can't really look at these charts and know and think that they hold up as much value as they did before. That's why I showed you the March crash. We know why that happened. It wasn't particularly present on the chart. There was absolutely no way that you would have looked at that Bitcoin chart leading into that move and said, you know what's going to happen? You know what's going to happen from here? It's going to go from here to here. There's nothing on the chart that would have suggested that. There really isn't. You could have said it might go from here to here, which it did, but to break down in such a dramatic fashion, no, that took something else. That took another thing that you couldn't see on this chart that allowed for that to happen. And remember, that is something to bear in mind when you're buying anything. The charts will give you one thing. They will give you risk to reward, statistical likelihood of something either holding or rejecting, but they don't give you the big picture, which is there's no guarantees in any of this. And some strange stuff can happen in the world, and it can cause reactions in financial markets. So, either way, I'm quite happy. Obviously, I've got big hodl bags of a whole range of stuff, and my trading account is pretty much ready to be deployed, and I'm not looking to get too clever on this. Trading bots are on the go to enjoy both upside and downside, and I'm ready. And this has all been part of the plan. Anyone who watches my channel knows that this was the plan, the larger plan, the bigger strategy. Get as much cash as possible together through the use of trading throughout last year and this year, and then apply it later on this year to much lower prices. And I will be buying altcoins all over the place. Trust me. But not today. Probably not tomorrow, but from a much lower area. And look, the ones that I'll be buying, I've made no secret of. They're nothing special. They're all things you've heard of. They're all top 20 for the most part altcoins that I'll be buying, and I'll be allowing it from what I consider to be the cycle to continue, which I don't see any reason to dispute this current cycle behaving like the previous cycles. The only way it's going to do that is if either it went parabolic now, because that causes a bubble in itself, or basically that's pretty much it. We'd have to have a bubble pop really to break the cycle, because that's what breaks cycles. We almost broke this cycle before because the bubble popped much earlier than expected, and we were always timing the market to pop around this time, around December 2021, and it more or less did in the end. But because of the rates and the recovery of the economy, and obviously the flow of money coming in from Federal Reserve, central banks globally, then we did parabolic peak earlier than expected. We went on to make a new all-time high, but this is the bubble pop, and so if we do see something like that happen, it would create another bubble pop, and it would be earlier. But we haven't really seen that. I don't consider that or this to be a parabolic bubble pop, although it was getting quite close to it. So what I'm saying is that I believe that the 4-year market cycle that we all know is still the model to overlay to this chart, and with that, because it's 4 years, largely driven by the halving event, and also the Dixie is in a bit of a 4-year cycle of its own as well. So there's reasons to believe that it's just going to continue as it always has. I'll stick to that model and expect that model to be not perfect, but roughly the same, which should lead us into new all-time highs next year rather than this year. We will keep our eyes on the prize. We don't know exactly, so we'll monitor it day by day. But for the moment, it's not exactly the same, but it's close enough for me to consider that a consolidation is going to happen now, Lower prices will be given to us towards the end of this year, end of the summer, into Q4. And then from that point we buy, and then we allow for those lower prices to rally into serious highs for Bitcoin, and obviously altcoins at that point should have some kind of time in the sun. So if we just look over here at the Bitcoin dominance chart, the two main areas for me to start to get particularly excited would be, first of all, 57.5% dominance, which corresponds to these tops and these supports. And then prior to that, after that, if we do continue, it's going to be around 63.5% dominance, which corresponds to tops, supports. And obviously a big breakdown here. This is good. This is really good for altcoins. If we get to those levels, it's not good for altcoins if you're holding on loads. You're going to see some pain. You're going to see some sats drained. But if we do get up to these levels, especially up here, then it will be brilliant. And this would be the perfect environment and the one worth waiting for. And you'd be like, all right, educated guess is going to tell me that if I buy altcoins here, we are actually going to outperform Bitcoin significantly and for a sustained period of time. And it'll be a lot easier to sit back and allow for those trades to reach the 5, 10, 20 X's or more, perhaps, depending on what you've bought. That's the dream. That's the goal. That's the strategy, and it has remained the same since basically December, when I was saying this is my plan, and hopefully this is what's going to happen. It does look like we're going to see that kind of behavior now, and based on Bitcoin and stocks, they are consolidating, and they should come down to these lower levels, as with alts, and then we'll see where the most appropriate buy zones are going to be. So, nice and boring video for you there, but again, you make a plan for yourself and you stick to the plan. My plan has been the same for ages, so I stick to that plan. The plan, is working so far, so good. I've got the cash, it's ready to go. I'm happy to wait. I've got the hodl bags, they're ready to go. They're doing whatever they want, and I've got some bots trading for the volatility, which is great. Let them do what they want to do, look, all of this has been thought about well in advance. So to see it, the downside now, I know for a lot of people is unpleasant, but for me, it's all part of the game, and actually, I'm very pleased to see it. And now that we're getting death crosses on, Bitcoin's 4 hourly, it would appear to be that we're not gonna be able to break a new all-time high at this point, not yet. We're gonna have to consolidate first and find a new bottom, whether that's based on a chart or it's given to us through continuation of black swan events, which again is certainly possible. Either way, sit back, watch and wait, enjoy the show, get ready to buy. Research what it is that you want. What altcoins do you want? You've got to make your plan now. There's no point in sitting around and then suddenly buying based on a tweet that somebody's made. You've got to make your plan now. I hate the phrase "millionaires are made in bear markets." I hate it because it's the sort of thing that influencers or big accounts will say to people as they're getting wrecked. But the best way to say would be wait for low prices, because if you want to see big gains, they're going to take place from lower prices. It's the counterintuitive nature of a market, isn't it? Really, everyone wants to buy green because most people can't imagine it going red afterwards. Complacency. Also, nobody wants to buy red because all they can see is risk. They cannot imagine what could happen if it turns around. So I appreciate that for the most part, this is the majority of human nature. There's only a select few that can see enough or imagine what it could be like moving forward to see that a trend can obviously change. It is changing now, clearly. Much to the dismay of Noobmaster himself, who had got used to high prices and was happy taking extreme risk. And now what we're doing is, we're letting this no man's land get filled up with price action, and we're going to monitor it all the way down. And then we will buy lower prices, and then we will hold those trades most likely for a year. Those won't be buy the dips, sell the rips. In my opinion, those are going to be buy the dips or stack stack up those altcoins and Bitcoin if you want for what is going to be a parabolic run for the entire market, especially if, let's say, a black swan does occur and the Fed have no alternative but to start pumping money, because they will do that. They will have to do that, which is why I feel they haven't lowered rates as most had expected. And it also means that they're going to leave themselves, they're going to screw themselves. Because if a black swan like the one we're assuming is going to take place, even on a small scale, oil will go up, which means inflation will go up. And if markets go down while that's happening, it's the worst of both worlds. If you lower rates, you will also cause higher inflation, and then we will be stuck in this cycle all over again of having to raise rates, in the years to come. And who knows what the price of oil is going to be. So, inflation is not likely to be seeing 2% anytime soon. If anything, it's probably going to be going up from now. And if they lower rates, it will continue to go up. And so really, what's that going to do to asset prices? It's going to make them go up. But from this level, or from a lower level, I would expect from a lower level. You don't just lower rates for no reason, especially if they're only at 5.5% to 6%. You lower rates because they've got to be lowered to stimulate economies and keep everything propped up, really. Now is not the time for that. The time for that would be, well, it's going to be obvious when the time of that is going to be. It's going to be in a black swan event, really. That is it's the only thing the Fed can do, really. And they're not going to pull out that super weapon until they really need to. Right, I'll leave it with you there. Nice, long, boring video. Hopefully you made it to the end. If you did, that's great. I am actually going to run some competitions on this channel soon, so don't be shy. You've got to subscribe, and there will be some crypto to be won. But I haven't organised it yet. But I will. Next month I'm going to start running all kinds of crazy stuff like that. Right, thanks for watching. Hope you have a nice day. Take it easy.